morning, everyone. We will start the morning call. In US, the Nasdaq was down 1.2%, while Dow was flat. Asian markets are trading marginally positive today morning. China's economic data, which came out yesterday evening, was the retail and factory activity, which fell sharply in April as because of COVID-19 lockdowns, which confined workers and consumers to their homes in many cities over there, and severely disrupted supply chain also. The retail sales in April in China fell by 11% year on year against expectation of 6.5% fall. And factory production declined by 2.9% against expectation of an increase of 0.4%. Shanghai, which has spent 2 months under severe lockdown, is aiming to start lifting restrictions from this weekend. So situation should improve from here on. Also, the European Union has slashed its GDP growth forecast for the current year in the EU countries from 4% earlier to 2.7% now. I will now hand over the call to the technical team.
Thank you, Jihan. Good morning, all of you. This is Swati. Looking towards the Asian markets, our Nifty is likely to open on a flattish note, and we might see some range-bound trading session during the day. From the last 3 days, we are witnessing that the Nifty is just trading within the range of 300 points, that is 15,700 to 16,000 mark on the higher side. Nifty is not able to cross the 16,000 psychological resistance level. So as long as it trades below that level, the view will remain a cautious itself. Any breakout on either side will decide the clear trend of the market. For the today intraday purpose, as of now, Nifty has a support at around 15,770. Below that level, 15,700, whereas on high side, 15,970 is the first resistance level. If it manages to cross that level, then definitely 16,000 and 16,070 levels can be seen on the intraday basis. Coming towards the bank Nifty, yesterday we have seen a very strong pullback rally into the bank Nifty. We have just informed you that 33,000 is the strong psychological support levels. From that level onwards only we have seen a pullback rally, and bank Nifty manages to maintain a positive closing above 33,590 levels, which gives some sort of a relief sign. Now going ahead for today intraday purpose, 33,820 will act as a immediate resistance level. If it surpasses that level, then 34,000 levels can be seen in the bank Nifty. Whereas on a downside, 33,270 is the first support level. Below that level, 33,000 will act as a crucial support level for the bank Nifty. Coming towards the Nifty Finance, for today intraday purpose, 15,380 is the first resistance zone. Above that level, 15,500 levels can be seen. Whereas on the downside, 15,070 and 14,900 are the crucial support level on the Nifty Finance. These are the important support and resistance level for the three indices. The overall view in the market will remain a cautious. A breakout on either side, the mentioned support and resistance level will decide the clear trend of the market. As of now, we are not initiating any buy call. Let the trend of the market get clear in the first half session, in the first half an hour. Then accordingly, we will initiate a trade. I think that's it from my side. I request derivative guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, yesterday there was a clear, indication of the bounce, and the same was said yesterday also by me. Also, now see, now there is one difference from the yesterday and today's data. The PCR at 16,000 strike has gone below 1, which was above 1 yesterday, which was indicating of a bounce. So now, with this data, it opens up the door for further downside for Nifty, and Nifty can probably now, witness some selling pressure below 15,800 odd level. So an important support area is 15,800. Once that is broken, you might see the selling pressure increase, and it can witness further selling. Also, Bank Nifty can witness further selling below the 33,500 odd levels, and it can open up doors for about 33,000 or 22,500 odd. So similar is the case for Nifty as well. So if you get a bounce today, book certain profits and then again wait for 15,800 to be broken. Once that is broken, selling can be done with a stop loss of around 15,900, and you can probably see 15,000, 15,500 levels in the next couple of trading sessions. Um, from the stock specific front, banks did witness some bounce, but not much short covering was seen in banks. So remains to be seen for today. Bajaj Finserv did witness good amount of open interest addition after a long time. That can be one stock which can pretty much witness further buying. While most other stocks should remain either sideways or under selling pressure going forward. Now that's it from my side. I'd like to ask the fundamental team to take over, please.
Today, the LIC IPO will be listing. Issue price is rupees 949, and there is a 10%. 10% of the issue was reserved for policyholders who will be getting 60 rupees per share discount, and retail investors and employees of LIC will be given a discount of 45 rupees per share. Size of the issue is 20,500 crores, whereby Government of India is selling around 3.5% of its stake. Just briefly on the company, it is a leader in the fast-growing life insurance industry with a market share of 64%. Although LIC is consistently losing market share to private players, it can yet one can expect that they will still grow at around 10% because of strong industry tailwinds. The key to look out for in the medium to long term for LIC will be that we expect the company will shift its focus towards the higher margin non-participating products, which will aid in VNB margin expansion. We think LIC should trade at a discount to listed private entities, which trade at between 2.5 to 4 times price to EV. Owing to its traditionally savings-heavy business mix and heavier dependence on agency channel, also because of lower VNB margins and lower ROE. So at the current valuation at which it will list at around 1.1 times price to EV, we feel it is cheap, but going forward, how the company will evolve from a traditional, PSU company, which was not focusing on profits until today, they will now be, focusing on higher margin products and trying to grow faster. So one will have to wait and watch. We cannot, assume things in here. So although stock is likely to list slightly, below the issue price of 949 rupees, given the correction in the overall broader markets, many other stocks have also become attractive. So we think if one doesn't have patience and a long-term view, then one can exit on listing and look for better options. Among other news, KEC International has won orders worth 1,150 crores across various businesses, which is positive for the company. VIP Industries result was below expectation. Although revenue growth was at 46% year on year, which looks high, but it was below expectation. And also EBITDA margin came at 9.2% versus expectation of 14%. This decline is not so much because of higher raw material prices, but more because of increase in operating expenditure. So overall, based on this result, we are neutral in the near term. MCX result is above expectations. Revenue increased by 19% quarter on quarter. EBITDA increased by 39% quarter on quarter and was at 53 crore against expectation of 49 crore. We are positive from a near-term perspective on MCX as crude oil and gas together form around 35% of its turnover activity, and they started rallying sharply from late February. So the full effect of higher prices of both these commodities will show up in the June quarter. So positive from near term, but again from medium to longer term, one should be cautious on this stock, because whenever commodity prices of oil, gas, as well as gold and silver come down, then MCX will be impacted. So that's all from my side. Thank you.
Good morning, everyone. First, the results. Vishnu Chemicals announced their results, and results have improved. We have seen a strong rally in Vishnu Chemicals before this correction in the market started. The sales grew by 56% YOY, and even the margins have improved to 15%, which is an improvement on sequential as well as YOY basis. The stock is trading 20 times TTM EPS, which is still attractive as compared to the other listed players in the segment. GlaxoSmithKline Pharma announced their results, and results were below expectations. The sales were flat, and even the margins have come below the expectations at 21.6%. The stock is trading 36.8 times on FY23 EPS. In the MNC space, we are actually more bullish on other names like Sanofi, Abbott, which we believe gives better growth prospects. Apart from the results, now today, IPO for Paradeep Phosphate is starting. It's opening up. It would be open till 19th of May. The price band is 39 rupees to 42 rupees. The company is into fertilizers, as the name suggests. They are actually into phosphates related all the products, which includes the DAP, MOP and all. And they are the second largest private player in this space, that is the non-urea fertilizers. The company has around 12 lakh million ton capacity as on 31st March 2021. They have added by revamping another 6 lakh million ton, and also they are acquiring a plant at Goa from Zuari, which is one of their promoter also, and that would add on another 12 lakh million ton, taking the total capacity to 30 lakh million ton, which would be operational and ready to use by September 2022. So this would benefit the company in the near term. We like the company because the fertilizer industry dynamics overall are good, and because they have done the backward integration, have tied and also tied up for long-term supply of the raw materials. One of their JV promoter is also holds the largest world's largest raw materials which is required for Paradeep. So that is also a long-term agreement with which they have entered into. So this is overall benefit for the company. So the IPO, the issue is around 1500 crores, out of which 500 is for the offer for sale and 1000 crore is for the fresh issue, which the company would be used to first the part financing the acquisition of the Goa facility and the repayment of certain borrowings. So overall, we like the company, and we believe this could be a good play from the long-term point of view. And that is what our recommendation is, to subscribe from the long-term point of view. Thank you.
Good morning, everyone. RateGain Travel Technologies has posted improved set of numbers for the quarter, both on the revenue and the margin front, with revenue coming in at 107 crores, up 9% Q on Q. Even EBITDA margins have improved to 14.2% versus QQ of 9.4%. Stock is trading at 78.3 times Q4 annualized EPS. Raymond has posted improved set of numbers for the quarter, with revenue growth coming in at 6.2% Q on Q, and came in at 1958 crores. Higher revenue led to higher profitability to the company. Stock is trading at 13.7 times. 13.7 times FY23 EPS. Thank you.
Good morning. So Bharat Forge announced its results. The result was marginally ahead of expectation. Revenue came in at 1,674 crore versus an expectation of 1,626 crore, which grew by 4.5% on a sequential basis and 28% on a YOY basis. EBITDA margin came in at 25.8% against an expectation of 25.7%. From QOQ of 25.5% and YOY of 27.5%. The management said that in FY22, the Indian operations have secured new orders worth rupees 1,000 crore across automotive and industrial applications. This includes a healthy mix of existing and new customers across traditional and new products. In the international operations, new orders worth $150 million have been secured across steel and aluminum forging operations in North America. At a consolidated level, the company expects FY23 to be a strong year characterized by top-line growth coupled with strong cash flows, ramp-up of the U.S. aluminum operations, revenue contributions from the newer verticals, and a further diversified revenue mix. According to the management, Bharat Forge is setting up a greenfield facility in the US for aluminum components for EVs and they expect the electric vehicle business will become as huge as its overall automobile business by FY25. The board of directors has recommended a final dividend of rupees 5.5 per equity share of rupees 2 each. The stock is trading at a PE of 23.3 times FY23 EPS. Thank you.
That's all from us. Thank you for attending. Have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.